Hi, I'm Andy and welcome to my channel about crypto. In today's video I want to talk about something really important, and that's taking profits and exit strategy. And as you can see in the title of this video, I said that this is probably my most important video to date. And it's not a clickbait title, I actually genuinely think that's true, because at the end of the day, your portfolio, crypto portfolio, right now may be worth hundreds of thousands or even millions of dollars. But until you can actually withdraw it to fiat or stable coin, or maybe some large cap coin such as Bitcoin or Ether, well, it's not really real money, it's just unrealized profit. And a lot of people fall into the trap of hoping that their portfolio will keep going up. And of course, eventually it won't. This happened to a lot of people in 2017 when they invested, missed the top of the market cycle, and then they saw the portfolio plummet 80-90% or more. So in this video we'll look at few strategies of how you can approach taking profits and how you can make sure that your exit strategy is matching your needs and you can actually come out of this market cycle with some good profit. So first of all, you need to know what kind of investor are you, what is your goal, why you invested in crypto, and what you want to get out of it at the end of the cycle or maybe in a longer period of time. Maybe you're a hodler, so you just want to invest some money in crypto and then keep it for 5, 10, 15 years. You're not particularly bothered when this cycle will peak because you are in it for a much longer period of time. But this strategy, holding long term, means that you are probably leaving some potential profits on the table. On the other hand though, it's by far the least stressful strategy because you don't have to worry too much about market movements in the short term because you know that you're in it for a number of years. And of course, it's also quite popular strategy in crypto community. A lot of people will be talking about diamond hands, never selling, and so on. But personally, I think while it's a good strategy, it really applies only if you have a huge portfolio and you keep chunk of your portfolio as your long-term hodl and you never really touch it. If you want to accumulate more wealth, if you want to build your portfolio bigger, then, like I said, it's the least stressful strategy, but it's certainly not the most efficient one. Another option is that you may just want to exit completely at the end of the market cycle. Maybe you got into crypto just to make a certain amount of money because, I don't know, you want to buy a house, start a business, go traveling or something like that. You don't particularly care about the next market cycle, or you don't want to think about it at the moment. You just want to get a certain amount of money out for a very specific reason. That's also fine, but it creates some risks, and we'll look at that in later stages of this video. Closely related to that is maybe you just want to reach a specific amount. I don't know, you want to make $1 million or $100,000 or $10,000, doesn't really matter. This can be quite risky, and we'll be talking about that in a minute, but again, it's yet another way of approaching it. And finally, maybe you just want to cash out at the top or as close to the top as possible and then re-enter later during the bear market so you can increase your positions, or maybe just take out the profits and re-enter the position you had previously but at a better price point. So regardless of what is your strategy, well, maybe except holding, you have to find the right time to start taking profits out or to exit your positions completely, because otherwise, of course, well, you will just miss it and then you have to wait for the next market cycle. I'll say it now, and it's especially important for this video, that I'm not a financial advisor, and no part of this video is to be considered as financial advice. These are simply my opinions, these are my observations, and I'm describing what I'm doing, how I approach this market cycle and what works for me. What works for me is based on the content of my portfolio, my risk tolerance, my goals for this market cycle, and so on. It may not necessarily match your needs, so please don't just try to copy it. The idea is that you consider what we discuss in this video and then you apply it to your own needs. And I'm mentioning this now because this all links to the final point here. What is your risk tolerance? What will happen if your portfolio does drop 90%? What if you miss the market cycle top? Would it be a big problem? Are you happy to wait until the next market cycle? Do you have a plan B? It's all really important. So let's look now at different points where you may want to take your profit out. Well, most people will probably try to time the market peak. But the problem is that very few people will actually do it successfully. I think in the last market cycle, there was only around 1% of all people who were invested in crypto who managed to get out at or very close to the market peak. So the problem with trying to time the market peak is that, well, the market peak is only obvious that it was a peak if you look at it in the future. So if you look at the chart, and you can clearly see, oh yeah, that's where market peaked and then we crashed. But in reality, well, if you look at price of Bitcoin over the last few months, so we have beginning of the year somewhere around here, around this red candle here. Well, we had a peak here and a big correction. We had another peak and another pretty big correction. 3 more peaks and a huge correction. Another peak here, another couple. We are now in the middle of yet another correction, although it looks like we're picking up now. Each of those peaks, of course, none of them is likely to be a market cycle peak. Well, obviously the previous ones weren't, and the latest one, there is very, very, very little chance that this is the market cycle peak. But all of them potentially could have been market cycle peaks. If we go back to 2017, well, we can see that although it was a clear blow off top here, a lot of people probably on this leg up here thought, okay, well, we are on the next leg up, we'll go up even higher. And then we just didn't. So trying to time market peak is pretty much impossible. So what other options you have? Well, you may want to exit at a specific price. Let's say exit your Bitcoin position at once Bitcoin hits 100K, which is fine, but what if it doesn't? What if Bitcoin gets to 99,500? Will you not take any profits out because you are $500 short, so essentially 0.5%? And what if then that was the market peak and the price drops and you have to wait for the next market cycle to actually be back in profit or to take the profit you wanted? So this, again, very risky strategy unless your price point is very realistic, very easily achievable. I don't know, if let's say you want to exit your Bitcoin position at 80K in this market cycle, I think there's pretty good chance, don't want to say that it's guaranteed, but there's pretty good chance that Bitcoin will hit that figure and you can probably get that money out. But if let's say you're aiming for, well, 100 should be achievable, but I think there will be a bit of a struggle to get there. But if your goal is, I don't know, 120, 150, 200K Bitcoin, there's absolutely zero guarantee, and it's even difficult to describe the likelihood, to assess the likelihood of reaching that price. So it's a very risky strategy. You may want to exit your position after achieving a specific profit. So let's say doing a 10x on a particular investment, or making 50K profit from that particular investment. This is pretty good, I would say, for altcoins, especially low cap altcoins, and we'll be talking about that later. And for larger cap coins, again, it's sort of similar to the previous point. It's well, what if you are $49,000 in profit and then that coin drops down or the market overall dips? You never got your 50K, but for the sake of what? Just $1,000 that you were short. So it can be quite risky. And finally, you can just simply take your profits out gradually. And that's something I will mainly focus on today. And what, at least in my view, is probably the safest strategy, because you're giving yourself more options, more room for error if you misjudge the market. And finally, it all goes back to what we were talking about previously. What's your risk tolerance? So from my point of view, the strategy should be different for large and small cap coins. At least it's different for me. So this is my portfolio structure, and of course it changes depending on whether we are in bull or bear market. Of course it changes depending on the value of particular coins. That's why there are no specific figures here. There are just quite broad percentage ranges, because sometimes just one or two coins pumping can actually impact, let's say, my alts portfolio quite significantly. So yeah, of course it's crypto, it changes all the time. But generally I aim for Bitcoin to be somewhere in a 40 to 50% range. ADA, which is my second biggest holding, it's around 15 to 20%. ETH, similar, around 15 to 20%. And alts, well, they're just basically the rest of it, which is somewhere between 15 and 30%. One note here, currently most of my ETH is actually invested in NFTs, so this percentage here is substantially lower. And well, NFTs, I suppose you could sort of tie them to alts in terms of risk, but they are really a separate category. So bear in mind that whatever we're talking about later in terms of how I approach taking profits and what's my exit strategy, that's my portfolio structure. It would be very, very different if, let's say, 100% of my portfolio was in low cap altcoins, or I don't know, it was ETH and alts. That changes things quite considerably. Basically, I see Bitcoin as a very low risk asset, at least as far as crypto is concerned. Similar with ADA, in fact similar with ETH. I know that absolutely worst case scenario, if I completely misjudge the market, I know that these three coins will continue increasing in value over a longer period of time, hopefully. So basically I don't have to stress too much about my alts and NFTs. Of course I want to make profits there, and percentage wise these are the best opportunities to make big profits. But at the same time, I know that this essentially is holding my whole portfolio, Bitcoin, ADA and ETH. And in terms of my portfolio content, actually, as you can see, there are no specific percentages here, how much is allocated to a particular coin and whatever, but in terms of which coins are actually held, like I said, I have Bitcoin, ETH, Cardano. I have tiny amount of Ripple, it shouldn't really be here, but yeah, I have held a little bit. I have some Chainlink, and then various other coins, Superfarm, Koti, Starata, so on, all the way down to Morphe. What's important here is the market cap of those coins. So you can see that Bitcoin, ETH, Cardano are all very big market cap coins. Well, Bitcoin, ETH, of course, are the top two. Cardano, it's bouncing somewhere between sort of 6th and 3rd position, but it's still close to 60 billion at the moment. We can disregard Ripple and Chainlink because, like I said, these positions are very small, especially Ripple. But then everything else, if you look at it, it's below 500 million. And it goes, in fact, majority of them are below 200 million, which I would consider small cap altcoins. And certainly anything below 100 or 50 million dollars is probably bordering on micro cap. As you can see, there are quite a few which are like 30 million, below 20, 14, 4, 4, 3. This stuff is, of course, extremely risky. This is all my Degen play, and these are my bets that can potentially go up massively in value, but they can also crash to zero. So as you can see, I don't really have many coins in the sort of middle ground. They're either top 10 or almost top 5 if we exclude stable coins, or they're relatively low market cap and micro cap coins. There aren't really many, or any in fact, in sort of, I don't know, 1 to 10 billion territory. My portfolio strategy is essentially based on holding some coins in the top 5, top 10, and then some that are very, very small. And like I said before, as long as these are performing well, the rest, I'm not particularly bothered, even if they completely crash. Okay, so let's look at my strategy for small cap coins. Well, first of all, if a coin has small market cap, it's a high risk coin. Generally, I don't sell them at a loss unless I know the project is completely dead. I don't know, something happened and there's zero chance of recovery. But so far this hasn't happened to me. Generally, if I'm at a loss, which I am with some of those coins when I invested in them earlier in the year, something like, say, SwapDex or YOP or, I don't know, a couple of other ones here, OccamFi. I think they still have potential. I think they have strong fundamentals. That's why I invested in them in the first place. And I think their time will come. So I would rather wait. If I lost, I don't know, 80, 90% in some of those cases, because a lot of those coins dropped massively over the summer, well, I don't particularly care about recovering that last 10 or 20%. I'm willing to risk it and hopefully ride it out and wait for the price to pick up, either at the very least so I can break even and hopefully go back into profit. But assuming that the coin is actually in profit, after it triples in value, I take the initial investment out unless I'm incredibly bullish on that particular project and I leave all the money in it. So, for example, something like CDFI fund, I've made 3x or at some point more like 4x, but it's a launchpad coin. I need my CDFI tokens to be able to participate in IGOs. And in fact, my CDFI tokens are staked, so I cannot easily sell them. So of course I'm leaving that alone. And also I think that this project will continue going up, at least for foreseeable future. On the other hand, something like Altura, I'm extremely bullish on this one. But if we look at its chart, well, I was investing in it somewhere around 2 cents, somewhere in early September. And then it did. And then it of course dropped down. When you see a movement like this, of course it makes sense to take out profits. I took my profits initially somewhere around here when it tripled in value. So then I know that, well, I can either reallocate that money into another investment, or I'm just simply de-risking it, taking it out of the table. And whatever I have left in that coin, well, if it goes down to zero, nothing will happen, right? It's the money I never had in the first place. But then I keep taking profits out, especially during or right after a big pump. It's better to take profits on the way up because you're taking out real money, or essentially you're not losing any money you didn't have any in the first place. If you're taking money on the way down, well, then you know that you had an opportunity to take it out at a higher price point, but you didn't. So again, if we go back to Altura, so I took some money out somewhere around here when it tripled in price. I then took some money out somewhere here, I think, when I did a roughly 10x or 12x, I think around 12x. And yes, it then spiked and doubled in price. But to be honest, I wasn't bothered about it. I was happy about taking some profit out here. I wasn't really expecting this spike. And I'm still holding part of my position, and that's still in a very healthy profit. So whenever you see those parabolic moves up, it's, at least in my opinion, it makes sense to gradually take profits out. So assuming that you de-risk your position at 3x or 4x and you took out the initial investment out, then, well, you can take some more money out, I don't know, maybe when it does 10x, 20x, or when it hits certain price points, when you sort of think, oh, I don't know, let's say it's approaching $1, probably people will be taking money around that figure. It's better to take some money out just before, because probably the price will drop. So that's my strategy in general for small cap coins or more risky projects. And with some of them, don't be afraid to completely cash out if that's how you feel. That's what I've done with some of my investments, which I made earlier in this market cycle in March or April. And I'm glad I did, because if I held them, well, they would dip massively over the summer. And I'll be probably still waiting, like with some of the other projects I invested in, until they actually get back up to their previous numbers. So if you need the liquidity, if you feel that you made enough money, or if you don't fully trust the project. I don't know, maybe you invested because someone mentioned it in their video or on their Twitter, but you don't fully understand it, or you're not as bullish on it as you should be to be fully convinced to be invested in it. Well, just cash out. Profit is profit. Like I said, people often say about diamond hands never selling and so on, but this is all bullshit. At the end of the day, if you are in crypto, you probably want to make some money. You may be in it for technology and everything else as well, that's fine, but making some profit is a big part of it. And if nothing else, it then just gives you more options to reinvest that profit. So you should never feel bad about cashing out your position if you feel that it's right at this point of time. My strategy for large cap coins is very different. So this applies to Bitcoin, but also ETH, ADA, and if you are invested in any of the other sort of top 10, top 20 coins, with the exception of course of stable coins, and I would exclude meme coins as well. I personally don't invest in them. Well done to everyone who makes money on them. That's awesome for you. But to me, well, they don't have utility. They don't have strong enough fundamentals to apply same investment logic as any other coins in the sort of top 10, top 20. I would treat them, regardless of their market cap, as a much higher risk asset. So I wouldn't include them in this strategy. Basically, my strategy for it is don't try to swing trade. So don't try to, I don't know, sell Bitcoin at 60K, hoping that maybe today or tomorrow you will be able to buy it again at 55K. If you want to do it, if you are a day trader, if you enjoy swing trading, by all means do it. I don't have time or patience for it, and I don't want all the stress that's linked to it. I would only consider swing trading any of those assets if we see something like this parabolic move up here. If this move continued up when Bitcoin was pretty much just going up most of October, all of October, I was preparing to sell it, but then we had a bit of that lull here, and I thought, okay, well, let's wait and see what happens. And then this happened, and that's exactly why I don't particularly like swing trading. It's very difficult to judge the market, to predict the market in short term. And yeah, essentially my large cap coins are my safe bets. I don't want to risk that investment because, well, I'm risking already with my very low cap coins and NFTs. So I want to have something that's relatively safe and stable. For those coins, I watch the charts, I look at indicators, I look at market sentiment, I look at what's in the news on, I don't know, Cointelegraph, what people are saying on Twitter, what crypto fear and greed index is showing, what charts are showing, what's happening. It's not so much about specific price, but more about, well, what sort of movements we've seen in the last few days or weeks. So there are also other things to consider with in this whole strategy of taking profits and reallocating your profits. Like, well, how big is your portfolio? How big is your position in a particular coin? If, let's say, your position in Bitcoin is $10,000 and then price of Bitcoin changes by 10%, well, you could potentially make $1,000 by swing trading it, but you're risking your whole position. My approach is that if I do start taking profits from any of the large cap coins, it's in smaller chunks. I may take out 10% or 20% of that position. So, well, 10% of $10,000, that's $1,000. And then 10% profit of that, well, that's only $100. Is it even worth it? I don't know, maybe it is. It depends on your personal situation, depends where you live, what are your costs and so on, but you have to bear that in mind. Fees are hugely important, especially if you're trading Ethereum or any ERC20 tokens. Gas fees can be absolutely ridiculous. So again, you don't want to be in a position when you thought that you made some money, but actually like 50% of that you pay in gas. That often happens with small NFT trades, or if you have very small position in various altcoins. Fees can absolutely kill profits in those cases. And of course, tax implications. Depending where you live, depending on your personal situation, well, do you have to pay any tax on any of your trades? Because that again, that can be, I don't know, 20%, 40%, whatever it's applicable in your country. So you may actually realize that something that at the first glance seemed like a pretty decent trade and decent amount of profit, at the end of the day, you may be getting like, I don't know, maybe 30% of that amount, and suddenly it's like, well, is it even worth it? Risking it, and yeah, maybe it's better to just hold it for a bit longer. So then the final or almost final thing I wanted to talk about is moving your profits. We know that crypto market doesn't all peak at the same time. If you look at what happened earlier this year, Bitcoin peaked in April, around mid-April, and ETH peaked almost exactly a month later, I think 2 days short of that. So we know generally that Bitcoin peaks first, then ETH, and what happens then, it's now a bit more difficult to predict. It used to be that we had altcoin season after ETH peaked, but this year we've seen a variety of seasons. We see the money being reallocated to alts, NFTs, meme coins. You have to be a bit more careful when we get to this stage. But it's safe to assume that when Bitcoin starts peaking, pretty much everyone takes money out of Bitcoin. People will move it to stable coins, people will move it to fiat, but also some of it will go to ETH. And in fact, ETH has this habit, which I mentioned before, of pretty much doubling in price at certain points. Well, essentially, it goes up pretty steady and then suddenly pretty much doubles in price in a period of 2 weeks. And if we look at this period here, well, that peak was on 12th of May. Bitcoin peaked around, I think, 14th of April, or certainly mid-April. So, somewhere around here. And you can see how this Bitcoin peak largely fueled this rally. Essentially, a lot of money from Bitcoin was poured into ETH, and then ETH rallies. So even if you start exiting your Bitcoin position a bit earlier, you can still make a lot of profits, or you can still make additional profit by reallocating some of that to ETH. So my strategy, once I see Bitcoin peaking, will be probably, we'll see what exactly market will do, and I'll be making future videos once we get to that point in the market cycle. But I'll be probably splitting my profits half between stable coins and fiat, and half will be going into ETH, hoping that ETH will pump next. And then of course, as ETH pumps, then next, that's a terrible arrow, then the profits from ETH go into alts, NFTs, meme coins, whatever happens to be the flavor of the month at the time. And as these start pumping, you have to be really careful and really quick with taking your profits out, because if you miss this pump here, well, the next thing probably will be the end of the market cycle. But you also have to look at what's pumping and how things are getting more and more out of sync at the moment. For example, in the last few days, if we look at cryptocurrency overall, crypto market overall, you can see a lot of stuff is still in red. A lot of stuff in the last 7 days was generally going down and then just started picking up pretty much yesterday. But if we filter by gaming coins, actually that's mainly green. And if anything, last few days, most of them were going up. Or if they had dips, well, they recovered much better and above the price before the dip. And that's really interesting, because what we are seeing is essentially certain segments of crypto market decoupling themselves from Bitcoin. Gaming is one very good example of that. NFTs are another good example. At the moment, NFT market is still quite bearish. It's actually started picking up recently. If we look at trading volume on on OpenSea, the biggest NFT market, you can see that there was a lot happening in August, then a bit of a lull, then again it picked up a little bit in October, but then recently, last few weeks or month or so, there's been hardly anything happening and only started picking up in the last week or so. This period here, essentially, you can see that there was a peak at the very beginning of October, and that's when Bitcoin started rallying. So then as Bitcoin and crypto started increasing massively in price, people were taking money out of NFTs, or they took that money out earlier, but they were not putting it back into NFTs, they were putting it in crypto. Now that crypto slowed down, NFTs picked up a bit. So you can expect that essentially they will be just balancing each other out. As crypto goes down, NFTs will go up and the other way around. So that's something that's really important to consider. How you make your money flow as the market is nearing its peak. And yeah, I think certainly it seems like the best strategy is reallocating at least some of your profits. I wouldn't reallocate all my profits, but some of my profits into ETH and then everything else. And then finally, well, how do you know when is the market peak? How do you know when to exit? And the answer is that we don't know at the moment, but essentially all we can do is observe what's happening, see what will happen next. And I think we are still very early in the market cycle. I don't expect the cycle to finish until at the least end of first quarter of 2022, and I wouldn't be surprised if it goes into summer or even autumn 2022. And at the moment, my price predictions, or the price predictions I'm taking into account when thinking about my exit strategy, is Bitcoin anywhere between 120 and 200k, ETH between 10 and 20k, ADA probably around $10. These are huge brackets, but they largely depend on when the market cycle will peak. If Bitcoin peaks around March, I would expect the price of Bitcoin to peak around 120k. If we go into, I don't know, September, October, I think we'll be around 200k. And how do you know that it's going to be a market peak? Well, that will be the tricky part. We'll just have to observe things like Crypto Fear and Greed Index. We'll have to look at how market movements are changing, what various indicators are showing us. And well, I'm making weekly videos about market movements, and as the market will heat up, I'll probably make them much more often. And we will just see. Everyone will be trying to navigate the same market, and I'm not planning, let's say, exit my position at 120k. I will definitely start exiting my Bitcoin position before we hit 100k. And I'll be doing it in small chunks, maybe 10% at a time every, I don't know, $5,000 or $10,000 or something like that. So let's say 10% at 90k, 10% at 100k, 10% at 110k, and so on. As we approach what may be the market peak, I may actually start taking out larger percentages. But at the moment, I think we are way too early to, at least for me, to think about it. And also the final thing, very, very final thing, is what is likely to be the next bear market bottom for Bitcoin. And this may be a big surprise for many people, but I think it will be actually something around 40k. And I know that a lot of people who are saying that, oh, Bitcoin can go to 100k, but it can also go down to 10k. No, it won't. I mean, not unless there's something like global ban on Bitcoin, or Satoshi sells theirs whole Bitcoin position or something equally crazy. But you cannot really take those things into account as a likely scenario. What we can expect is, well, we can look at previous data and see what's likely to happen in the future based on that data. Bitcoin never really dipped, or at least not for longer than a few hours, below its 200-week moving average. So essentially, average price of Bitcoin over a period of roughly 4 years. It's this dark green line on the chart. And that's already around $17,500, and it continues going up. and it will continue going up because over a long period of time, price of Bitcoin continues going up. So that already shows us that 10k Bitcoin is pretty much impossible. I mean, sure, there could be a very sharp sudden drop like there was one at the beginning of the pandemic, but that also recovered very quickly. It's not an actual prolonged bear market bottom price. So that's one indicator, around 17,000. Another thing we can look at is this purple line here, which is our 20-week moving average, Bitcoin's bull market support band. And if we zoomed all the way out, we could see that whenever Bitcoin holds it as a support, like it did earlier, well, essentially, I think it was September, yeah. It happened here, it happened here. Before that, it happened here for a moment. And there were periods in the past when same thing happened again. Whenever that happens, Bitcoin never dipped below that price level again. And last time we held it as a support at $40,000. So that gives us some sort of an indication that 40k may be the market bottom. And finally, the third way of looking at it is, well, what happened in the last market cycle, or the one before that, so 2017 and 2013. And if we measure the movement from the peak, which was just short of 20k, down to the market bottom right here, that was around $85,000. That was around 85%. If we hit price between 120 and 200k, if Bitcoin hits price between 120 and 200k, well, if it's 200k and we dip 80%, each cycle is slightly less volatile than the previous one. That would be 40k exactly. If we dip from 120k 80%, that would be around $24,000. So in any case, I don't think 10k Bitcoin will ever happen again. I think that prices around 20 to 40k at the 20 to 30k at the bottom are potentially possible, but it's much more likely that we may actually bottom out around 40k, which I think is an interesting thing to consider in terms of exit strategy. So it's quite a long video and a lot of information. I hope you find it useful. I may make another similar video in a while, just something a little bit shorter maybe, but essentially discussing similar subject. And I'll be certainly talking about exit strategy and reallocating profits as we approach, well, maybe not the end of the market cycle, but as the market starts heating up. Because at the moment we are nowhere near the end of the market cycle. Bitcoin is, well, even if it had some recent new all-time highs, they were barely above the previous one. So I think we still have a long way to go. But of course, as we enter next year, especially as we start approaching, exceeding figures like 100k and get to March, April and beyond that, it may be quite difficult to judge whether we're seeing local top or is that a market top. The whole market cycle top. So we'll be looking at it in much more detail, and at the end of the day, no one knows when the market cycle will peak or at what price. We're just trying to do our best in estimating it and speculating. So we see how it goes. I hope you found this video useful. If you have any comments, if you would like me to make another one and clarify some things or describe something else, please do let me know. If you like the content, please hit the like button and subscribe to the channel, and I will see you next time. Thank you for watching. Bye.